we hear it trotted out a lot on earnings calls. Oh, the results went against us. Well, they probably went against everybody then. And also, isn't that kind of up to you to price appropriately and that sort of stuff?
Entain and MGM Resorts have reported BetMGM's Q1 business update, offering investors a glimpse into the performance of the joint venture and outlining some of its strategic objectives. Against a tough backdrop of intense competition from both traditional competitors and the insurgent prediction markets, BetMGM still delivered $25 million in adjusted EBITDA in the opening quarter of 2026. But is it all sunshine and rainbows, or is there a bigger story to tell? Welcome back to iGaming Daily, supported by Optimove, the creator of positionless marketing and the #1 player engagement solution for sports betting and iGaming operators. I'm Charlie Horner, and today I'm joined by SBC Americas news editor Tom Nightingale. Tom, how's things?
Yeah, not too bad, thank you. Always interesting when one of the major US players reports publicly, obviously considering everything that's going on in US gambling right now. So yeah, I mean, Adam Greenblatt and co gave us plenty to get stuck into.
Yeah, brilliant, and it's always nice that it was sort of ringing the bell on earnings season. So I'm sure we'll look forward to reporting on that over the coming weeks. Let's jump into it then, Tom. I think it's probably a good idea just to start with a rundown of the top line figures. So what's the scores on the doors for BetMGM in Q1?
Yeah, I mean, I would say sort of mixed reviews, mixed news, really. I think. I mean, obviously there's growth, as there is every quarter, like year over year for BetMGM. But I mean, we're pretty modest, really. I think net revenue is up about 6% year over year, $696 million US, I think. So it's like it's a small growth. Notably, actually, I mean, Citizens Bank, who in the US are a huge, do a lot of analysis of publicly owned gambling brands. Their estimate was, I think, was more about over 750 million. So 696 million, falling fairly significantly short of certainly what some analysts were projecting. But I mean, earnings like adjusted EBITDA are up 11% year over year. So we're seeing, by BetMGM have set pretty high standards, I think, really, for themselves. I imagine there will be some internal disappointment at the sort of single digit revenue growth and a bit of a flattening of the curve. But I mean, they're still expecting. They maintain that they're still expecting to hit their guidance. It's interesting because they said they remain on track to hit their EBITDA and revenue guidance for the full year, but they have lowered it to right at the bottom end. So they've just about managed to get away with not having to say we have lowered our guidance. But it's clear that they're falling slightly short, I think, of what they were hoping, where they were hoping to be at the end of Q1.
Yeah, I think it's important that we place BetMGM within that context of the US, because they have sort of positioned themselves as one of the main competitors for FanDuel and DraftKings, particularly, since the repeal of PASPA and the formation of the joint venture between Entain and MGM. So yeah, perhaps a little bit disappointing. And you say that they sort of not really lowered their guidance. I think that's debatable, perhaps.
Semantics, I think, isn't it, really? Yeah.
It is semantics, yeah, because they said that, I think originally it was like 3.1 to 3.2 billion in revenue for the full year, and I think now they're saying, well, it could be 2.9 billion to 3.1. So I guess that overlap gives them a little bit of leeway, but EBITDA are also set to hit the lower end of full year guidance. It's not a great story to be telling investors, is it?
No, I mean, yeah, to use Citizens analysis again, right? I think their EBITDA guidance range is 300 to 350 million. And I think Citizens are now saying they expect it to be 305. So, I mean, you're just about scraping in there, aren't you?
That really is the lower end.
Yeah, getting in there on goal difference, really. But yeah, I mean, it's not, I don't know. Yeah, it's not quite the story they will have wanted to tell this quarter, but um, Adam Greenblatt, CEO of BetMGM, referred to a lot of headwinds in his call. I mean, some of this I think is just explaining away. I think there's a certain level of, trying to sort of sugarcoat things, but there's no doubt that there are certain headwinds in the US gambling industry at the moment. We talked a bit about customer friendly sporting results, which is a term we hear quite a lot. But I mean, you have to look at the wider context, don't you? BetMGM has um, more competition and newer competition in some fields than it had this time last year. So this is all relevant context, I think. But I mean, he said, even with the slightly lower guidance, I think it's clear that they're confident they have the toolkit to succeed. Particularly I think on the online casino front, which I think we'll talk about a little bit more. BetMGM have plenty of things going for them, really, don't they?
Yeah, I think one thing I really picked up on that call was that yes, there is slight disappointment with some of the numbers that have been posted, but there's a real bullishness that actually in the long term they're on the right track and they definitely have the tools to overcome some of the challenges that they're facing. Um, you mentioned the difference between sports and online casino and the fact that there was perhaps some customer friendly results in Q1 that sort of skewed the numbers on sports, although that's the nature of the business, right?
Yeah.
Could you put a bit of color on the context of the difference between the results in online casino versus sports betting?
I mean, you're right about the customer friendly results thing. That's kind of thing. It's on operators to find ways to mitigate that, isn't it? So, I think we hear it trotted out a lot on earnings calls. Oh, the results went against us. Well, they probably went against everybody then. And also, isn't that kind of up to you to price appropriately and that sort of stuff? Anyway, says me from my armchair. But yeah, I mean, BetMGM. So I think like the online casino uh income, I think revenue from online casino was not far off $500 million, I think. Whereas sports book is more like 200 million. Like, it's a big difference, especially when you take into account, in the US, we're now at what, in terms of active US state regulated sports betting jurisdictions, I think we're at about 32. Whereas online casino, obviously, you're talking more like 7, you know. Um, so considering how much of the US is available to BetMGM for sports compared to online casino, like that's a stark difference. Um, I think there's several factors. I think, I do think the results is an impact. You can't really say, you know, online casino is particularly seasonal or particularly dependent on how, external factors perform compared to sports. But also, I mean, I've heard operators talk about this quite a lot. Like sportsbook, quite a lot goes in, I think, to running a sportsbook, like your pricing, breadth of markets available. Like there's a lot to differentiate on. Online casino, comparatively, the number of suppliers that are in that game. Okay, you want to offer a broad selection of sort of, slots and table games and live dealer content and all this sort of stuff. You want those differentiating factors. But at the end of the day, like most of your online casino players are just hitting spin and seeing what comes up. Like that, comparatively, I think that's a surely can't be as heavy a lift on the operator as getting a leading sports book in places. And I mean, what really fascinates me about BetMGM's online casino side of things is they have a very, very brand name and intellectual property heavy approach, which I think is their differentiator in the market as far as I see. Like from where I am in Ontario, certainly you can get a lot on BetMGM's online casino that you can't get anywhere else. And while that's true of brands like FanDuel, with like their Huff and Puff series and this sorts of stuff, like you go onto BetMGM and you see, let me off the top of my head, you see Family Feud, you see The Price is Right. They also have signed deals, I think, to be exclusive providers and developers as well. Like a lot of these are sort of development deals where they're involved in the inception of the process as well for things like Friends. So they just announced one for Survivor, which in the US, huge, long running, hugely popular reality TV series. And I think even just this week, they announced they're releasing sort of Elvis Presley branded slots that nobody else is going to have. Like, how much stock you place in putting these pop culture icons, as a player, it depends, doesn't it? But there's no doubt that if you log on to an online casino and you see those kinds of things available, that's a standout, Wizard of Oz is another one they have, so they've really gone big on the intellectual property, developing these brand name things. Adam, the way that Greenblatt put it on the call was like, we want to be within the online casino market. We want to be the home of entertainment. And I think there is something to be said for that. Like, some of it is a bit sort of splashy PR talk, but I do think it probably goes a fairly long way, particularly maybe with the sort of more casual online casino customer, I would say.
This is exactly what I was going to add on to what you were saying there, Tom, is that if you're positioning yourself as the home of entertainment or the go-to online casino for the recreational player, having lots of different IP that people just know from TV shows, from games, from other media, is a real big win for you. And I think BetMGM have always been very confident in its online casino products. It's I think more so perhaps than its sportsbook products. And I think that's something that Greenblatt was talking about on the call. With the prediction market competition, we'll talk about this a lot more after the break. I think online casino perhaps becomes a little bit more important for the regulated operators. And Greenblatt seems very optimistic about Alberta in particular. Obviously, a patch that you'll know very well, having written about that extensively. And also, he seemed quite confident that Virginia would legalize online casino perhaps next year. What did he say about iGaming expansion in some of those territories?
Yeah, well, I mean, I know that BetMGM are looking forward to Alberta immensely. They are. It's hard to break down the Ontario market thing because they don't release sort of operator by operator data. In fairness, they have about 50 of them, so that would be quite a heavy lift. But reputedly, at least from both comments from BetMGM and also some market analysis, like BetMGM are one of the market leaders in Ontario, particularly on the online casino side of things. And obviously in the US, like, markets opening up with both online sports betting and online casino at the same time is kind of like seeing a unicorn. Like, that doesn't happen really, whereas Ontario, Canada, we're going to be 2 for 2 on that now, right? Ontario opened up with both verticals, Alberta doing the same. For a company like BetMGM, that's a gold mine, frankly. Not to say the least, they also have people like, huge hockey stars, Wayne Gretzky, Connor McDavid as brand ambassadors. Like, that's going to go a long way in Alberta, hockey mad province. In the US, obviously, things are a little bit different. The Virginia thing, So to recap briefly, Virginia got pretty close, very close to legalizing online casino this year. Bill passed both the Senate and the House, and then basically lawmakers just couldn't agree on the specifics in conference. So it sort of died, but I don't know if died is really the right word, because that was by 1,000 miles the furthest they had got towards actually getting this thing done. Whether it happens next year, I do not know, but you can kind of understand why publicly people like Greenblatt are being very bullish, because the conversation has certainly advanced significantly. You've also got Maine, who's legalized online casino, notwithstanding a court challenge. Their model is a bit different, so BetMGM won't necessarily be guaranteed to get into the Maine market. But the fact that this sort of momentum is happening, even if states like Virginia don't quite get over the line, shows that I think maybe the conversation is being taken rather more seriously in some states than it would have been even a year ago. And maybe prediction markets is a factor in that.
Yeah, it's not quite the abyss that we were talking about, perhaps 12, 18 months ago. All right, Tom, we'll take a quick break and we'll come back and we'll place this within the context of the rise of prediction markets.
To meet additional operators, bigger and better than last year. There is such a buzz.
Be able to meet face to face. A lot of good people I've met, new companies I hadn't seen before. Far more exciting than, your traditional conference for sure.
Welcome back to iGaming Daily. Now, Tom, you would have been glued to Adam Greenblatt's remarks yesterday. I think it's fair to say he's not a fan of prediction markets and their long-term outlook in terms of its wider popularity and rise into the mainstream. Now, we know that due to BetMGM's ownership, there's going to be vested interest there. That's fine. But could you just give us a bit of a sense of what Greenblatt was talking about in terms of prediction markets?
Yeah, I mean, so the context you mentioned is obviously key. Like, while FanDuel and DraftKings and Fanatics and people have sort of rushed into that prediction market space, BetMGM with MGM Resorts International as a co-owner, with Las Vegas and state gaming licenses on the land-based side and stuff, much more important to BetMGM's owners. They are in a different position. I think they're in a pretty awkward position, personally, because like all of their, their sports betting alliance comrades, I guess, slash competitors in the market like FanDuel and DraftKings and people are realizing this pretty profitable, how profitable an opportunity it is at the moment, I don't know. But they're realizing this opportunity in real time while BetMGM kind of has to be on the sidelines, right? Greenblatt was in, it's nothing new that he has publicly stated this position. We side with our state regulatory partners, our tribal gaming partners, let's not forget, is another factor for MGM. He's been very staunch that like, while this is effectively being seen by state gaming regulators as illegal gambling, we cannot take part in this. It just doesn't work for us. What he did say that was pretty interesting, that was a bit new and interesting on this week's call, was there were some pretty clear references to how much prediction markets companies are splashing out on marketing and everything nationwide. There's some pretty forthright comments. They call themselves prediction markets. They're buying sports betting keywords as well as throwing money at any sports media property that will take it. They are targeting sports bettors directly in their marketing, thereby bidding up the cost of acquiring new players. Clearly, while Greenblatt isn't alone as a sports book, a gaming executive saying the impact, we're not feeling that much impact. How much of that is sort of, putting on a brave face or maybe even refusal to confront the actual reality that's unfolding in front of them? I don't know. But it was pretty interesting to hear him admit that at least the way that prediction markets are going about their business we're starting to feel the impact of that because it's hiking up some of our costs. And like I mentioned a bit earlier, like frankly, it's new competition, isn't it? BetMGM weren't a Kalshi competitor because nobody in the gaming world really knew who Kalshi were, like 18 months ago. Now, you could argue that, okay, while like DraftKings and FanDuel and people obviously aren't doing the sports contracts things in states where they are competing with BetMGM as a sports book, Kalshi is, Crypto.com is, Polymarket is. A lot of these companies incidentally market themselves, I don't know if they market themselves as offering sports betting nationwide, but they certainly market themselves as offering come and trade on the results of sports games nationwide. Let's be honest, it's the same thing. So it was interesting to hear Greenblatt reference that pretty openly, because I think that now the sports side of prediction markets, started about this time last year, really ramped up kind of, I guess, start of NFL season and everything, like the busy North American sports calendar in sort of September, October time. It's been long enough now that some of these effects are starting to be felt, I think.
Yeah, I think this is the first time that we've actually had some colour of how it is genuinely having an impact on the operations of regulated sportsbooks, aside from just, share prices plummeting over the last 12 months in that industry. I think BetMGM's a really interesting example of this because, as you said earlier, Tom, that they're sort of stuck in a quite awkward position. I think they're illustrative, perhaps more so than any other operator at the minute, of that split we saw with the AGA, and now we're seeing similar sort of thing play out with the Sports Betting Alliance as well. But having said all that, Greenblatt seems to be confident again in the long term, and as reporters, we have to question whether that is genuine or whether he's putting on a brave face for investors. But he does seem quite confident that in the long term, regulated sportsbooks or these traditional sportsbooks, BetMGM, FanDuel, DraftKings, etc., will win out in the long term because fundamentally it's just a better product. We've heard that argument before. But what he did also say was that it seems to be a completely different cohort of player as well.
Yeah, they were interesting comments as well. And, again, I wouldn't necessarily place full faith in those public comments about that he truly believes that they are completely different cohorts and that there's no overlap. Of course, there's some overlap. I imagine there's a lot of people, even in regulated sports betting states, who want to know how Kalshi or Polymarket's options compare to FanDuel and DraftKings and BetMGM's, right? When all of that stuff is available to them, ostensibly legally, with an asterisk for the time being. So there's clearly going to be some overlap. But what I will say is his comments. So I mean, what he said was that we're not really competing for the same players, because he said that prediction markets is going to be a place for, if you're a professional sort of gambler, if you're a really sharp, if you consider yourself a sharp, right, somebody who gets an edge on the house and all that, or on other users, I guess, on prediction markets. If you're like a market maker, if you're a kid in high school, which I won't get into, but there is also a bit more age leeway in some places, this sort of stuff. He said if you're in these categories, prediction markets are kind of the logical, or at least most available place for you to bet on sports online at the moment. That's just kind of the way it is. And I think he has a point there. It's interesting because I've seen that kind of reflected in some analysis, from some of these like Citizens and other firms like that in the US. There's been quite a lot of analysis happening. And the general consensus from people who are much more in the know than I am about this sort of stuff seems to be that, yes, prediction markets are kind of a place to go right now if you are a really sharp bettor, or if you're somebody who maybe gets limited by a sports book because you're too good. You don't necessarily face that kind of friction on a prediction market platform currently, so it's a good place for you to go and beat the house or beat other players, and get that edge. The flip side of that, of course, is that there's going to be I do agree to a certain extent with sportsbooks executives when they say that you cannot replicate the full sportsbook experience on a prediction market platform, with the huge caveat that being in Canada and being a nice law-abiding person, I have not used a prediction market platform to trade on sports or anything, actually. So I don't know firsthand. The consensus from people who have used them firsthand and stuff does seem to be that, prediction market's kind of good if you think you can get an edge on who's going to win the next game or that sort of stuff. But if you want a deep parlay or accumulator option, or you want like a wide range of player props or whatever, for now at least, sportsbooks are your place to go. So I all this to say, I think that while there is some overlap, I do think they're definitely not like for like audiences at the moment. But we kind of have to asterisk everything, because if prediction markets get legitimized in the courts in terms of offering sports, then they are presumably going to lean more heavily into trying to build out that product and sort of replicate the sort of deep sportsbook experience more, because it's such a potential moneymaker.
Yeah, I agree with you in the sense that the for now part of the statement rings true. But I do really fear that, not fear, because let's face it, I've got no skin in the game. I'm not even in the continent. Never mind a user of any of these sites. But I do think that if Kalshi and Polymarket and these prediction markets, they position themselves as and they achieve their goal, which is we are the place where you can predict anything and everything, and we're going to revolutionize what it is to be a citizen, to be involved in politics, in public events, in sports, everything like that. If you're using Polymarket or Kalshi for politics, news, current affairs, why wouldn't you also just use it for sports as well? And then you are looking towards the sports books to say, well, how do you compete with that. You're going to have to build out your product to essentially match the prediction markets, which I guess
Yeah.
they're trying to do. But I think there's a slippery slope here if you're a regulated sports book, and you have to position yourself as just having the better product and sort of offsetting some of those threats.
I was having I had a really, really interesting chat for our upcoming issue of SBC Leaders magazine. I spoke to a couple of people at Fanatics Betting and Gaming, including their chief trading officer, who is, I'm sure you wouldn't mind me saying, he's a huge odds and product nerd, built his own sportsbook platform and odds making and all that sort of stuff. And I couldn't help, given that Fanatics have Fanatics markets now in the prediction markets game, I couldn't help but ask how he assesses the difference in the products, right? The sports book and the prediction market. And he made another good point about the difference, which is that sports books kind of pour a lot into what he called the generosity loop. So if you're a bettor and you're losing a little bit, or even if you're winning, if a sports book wants to, which they often do, they can just hit you with a $5 bonus bet, or they can hit you with a no sweat bet, so bet on this, you'll get your money back anyway, and it's that kind of engagement that for a lot of people, as long as it's used in the right way and it's not targeted to, people who have shown signs of vulnerability and stuff. Certainly for me as a casual bettor, that really enhances my entertainment factor on a sports book. Prediction markets just don't do that because that's not their game, right? They're not, what they want is for people to, the trading, they count volume, right? So any trading is good. And B, that's just not their model of operation. So I think for a lot of, it depends what you want, doesn't it? Like you say, if you want that all in one, I want to bet on the weather and the entertainment award shows and the sports all at once, you have an option to do that for now, don't you? Whereas if you want that kind of deep dive, detailed sports betting experience, you want to be rewarded for your play and everything, then sportsbooks for now probably do it.
Yeah, definitely. And I think that casual and recreational part is where we'll just briefly bring it back to BetMGM before we leave, because we did get sort of verged off into the whole prediction markets debate again, which we're more than happy to do on the show, of course. But let's talk about BetMGM within that context of the joint venture. We know that it's delivered some value back to its parents in this quarter, perhaps not as much as it perhaps wanted to, or perhaps the parents expected to. Do you think both parties are happy with the status quo at the minute? Obviously, there was a lot of speculation 3 or 4 years ago whether there was going to be movement in terms of an M&A deal. I think that's probably off the table at the moment. But do you think both parties are happy with the status quo, or do you think there's a long-term play for both Entain and MGM?
It's a really interesting question. I think that based on BetMGM's general performance, I think both parties are probably pretty happy with how it's going. They're undoubtedly like a podium contender everywhere that they are, really. Certainly in iGaming, online casino, they are doing some pretty innovative and novel things. And then we know as well, right, that they've just started returning money to their parents, right? They started getting cash back. Finally, it's kind of an actual, there's dividend for both Entain and MGM Resorts. So I would think that they are sort of, happy for the time being. I would think. I think you're probably lying if you look at Entain and say they would have no desire to explore some kind of prediction markets thing. For example, if they didn't have the sort of US politics of MGM, being in this joint venture with BetMGM. Like if Entain wholly owned BetMGM, I'd be very interested to see how that strategy on the prediction market side of things would differ, considering like what Flutter are doing and all that sort of stuff. So I guess again, it's sort of dependent on how the US market unfolds really over the coming months, years, God knows. It's very hard not to use, we've used a lot of terminology like for now or asterisk. It's very hard not to feel like that with everything that you talk about really now, big picture in US gambling, because we still, other than the fact that, yeah, surely it's going to the Supreme Court, I think recent court rulings have just shown that we need a Supreme Court decision on this prediction market stuff. But until things like that get resolved, it's hard to know how companies are really feeling big picture, I think, because you're sort of on uncertain ground. But in terms of what you can see from BetMGM in front of them at the moment, I think there's nothing to be displeased about, really.
Fantastic. Well, I think that's probably a good place to leave it, Tom, because we could probably talk about this all day, but we have other things that we need to be doing with our day. So
We do, yeah.
thanks a lot for taking the time, Tom. We'll put some links in the show notes so listeners can take a read of your coverage of all of BetMGM's updates. Thank you to Optimove for supporting the show, and thank you to our audience for tuning into today's episode of iGaming Daily. And come back tomorrow to keep up to date with all the latest global gambling news.